All right, all right, all right. That's my mic test. Good Thursday morning. Um, let's see what we got going on. Did I shut that? Oh no, there you go. It's up. It's up. All right, we got GDP at 8:30. That's something to keep your eye on. Jobless claims. So 8:30 is a hot hour. Continuing jobless 4-week average. PCE prices at 8:30. Yeah, 8:30 is going to be a hot hour. It's going to kind of dictate which way the market's going to go. And then we have the Jackson Hole Economic Symposium going on. It's going on yesterday and today. And then mañana we have Powell speaking. And that's really why the market's been so choppy. People kind of waiting to see what's going on. In addition, there's a lot of traders who are on vacation, so the volume is very light. And you see we get this muted move, like one little move for the day. And we're really, we're just going nowhere all day, just sitting in the same spot, churning around, which that's okay. Yeah, we'll take it if you're an income trader. It's doing wonders for your matrix trades and all sorts of different types of trades that people take. Hold on, getting a little coffee. Oh, that's good. All right, so yeah, that's it, man. That's what we're looking at in the news. So let's get right to it. Let's get those commodities up first. And the first thing we're looking at here is going to be oil, and oil's making a little bit of a bullish move. It's coming off the daily support, so I'm bullish on oil. It might set up a bull flag today, so keep an eye on it. That's a good entry point. There was an entry right here on this break, but this is a lot of congestion to get through, so I wasn't too excited about that. I remain bullish above the support. I'm watching the support for the move down. I'm going to keep my eye on that flag and probably take advantage of that flag on the dailies. And then we go to gold, and gold is doing what gold does. Nothing. It's just, it's got this channel here. You could throw a midline right through this channel if you wanted to trade this thing, and maybe trade, from the low to the mid and back and forth on the breaks. It's not moving that aggressively, and there's plenty out there to trade. So I've been just ignoring it. And that brings us to bonds. So I'm bearish on bonds, and look, we just keep getting these micro trend breaks, and look, here's another micro trend. So I'm bearish, and I'm watching this micro trend, and I'm going to take this break of this micro trend. I'm not going to bother to put the line in there. I think you guys get the idea now, right? There's one micro trend that we put the line in. So you could do that and just play the bonds down. Again, if you wanted to take that short and you're not trading futures, you could just use it TBT for the short, and these are ETFs, TBT for the short and TLT for the long. And bonds, that takes us to, what didn't we cover? Oh, let's look at BTC. So BTC is grinding its way up, but I'm going to argue that this is a reverse microtrend going on here. So you could probably watch this. It's breaking a little bit, but I'm not loving it. I think I would watch this microtrend for a breakdown. I'd probably throw my line right in here and take that first move, get me down, and hopefully that would get me in. And I'm watching a break of this support that might get me in early and get down to test that support, so I can get a couple off when we're testing that support. I'll probably be in profits and leave one unit to run. So I usually do it in threes. And the break, I'd probably take one off right here and see if I can get it down to here, and I'd take one off right here and then leave one on to see if I can get that runner. And this is a pretty good support, man. But I don't know, man. I'm not feeling a debacle. I'm not feeling a very aggressive move to the downside. I'm even thinking that that might not be the case in ES. But we'll get to that. So let's get to that right now. See if I can get this bad boy out of my way. There it is, out of my way. All right, so we're looking at the ES, And I'm neutral right now, and I'm watching the daily supports. Let's just swing this over to the daily. There you go. So here's my daily support. I'm keeping an eye on it. It's kind of rejecting it. We had a nice run up at the end of yesterday, which kind of indicated that we were getting this bounce today. This bounce is setting us up for a bear flag, and that's what I'm watching. I'm watching a bear flag. Now, what I'd like to see is it hold around here, maybe get that bear flag on Friday, tap off this 80 and reject this. If it rejects us again, then away we go. So, and that's speculation. We're not going to trade on that whole scenario. But what we are going to do is watch that bear flag. And our entry, if we end up with a bear flag today, our entry would be the break of today's low tomorrow. And that would be our entry. And that probably translates pretty well to the daily. Yeah, which it does. The bear flag is a little more obvious. But I guess at the open, the bear flag will represent well on the SPX chart. We could just jump right to that. 1, 2, 3, bank. Okay, so we'll open up here, and then the bear flag will be representative. I think I'm thinking that we reject that, go up and close this gap. The only thing that's got me worried is we have a little gap right here. That could be the extent of the bear flag run, which is what we were calling for when looking at the futures. So that's pretty interesting. There's a couple of good reasons why we would make that move down to 40.80. And that's probably my most expected move. A break here, and then we head down to the 40.80 zone. But we have this huge gap right here. This 37.91 area. And I'm very convinced that the market is going to fill that gap. I mean, it could leave it behind and fill it down the road, and these are our targets on our next debacle. And I mean, when the market started selling off and the Fed started raising interest rates, the gaps that we filled were 6 to 8 months old. Coming out of the lockdown. So I mean, it's very possible that we leave that behind, but that always makes me leery when taking trades, because I know that longer term trades, because I know that bad boy is right behind me. So unfortunate that it's there. So yeah, I think that's how we're playing out. I think we're tagging, we're pulling off that that bull flag, and we're going to retest this daily support. And then we have to see where we go from there. I would like to see it reject and make another high. That would work out well for me. But I think it's going to make a lower high. And then we got one more woe is me coming in, just because everybody's expected it. I mean, if you ask me, things are going well. Things are going well. I mean, obviously inflation is high, but I think that they're getting a handle on it. I think that we're going to see an aggressive reduction in inflation in some of the numbers. And I don't think we're going right back to the 2% that the Fed's looking for, but I think we're going to have a aggressive reduction in inflation. And before that happens, you're going to have all the naysayers, which you hear them on the news all the time, all the naysayers bitching and moaning and looking for trouble, and that's going to force the market down, and then we're going to get back into a bit of a recovery. So I think that we're on the right track. What else are we going to look at here today while I babble? Let's take a look at Tesla. Oh my God, look at Tesla. It's down 600 points. All right, so the split went in yesterday. This is the new pricing. Here's the pattern. I think there's going to be more action in Tesla because more people will be willing to get involved with a $300 security than they were with a $900 security, and I think it's a very good move. We have a double top up here. You see the momentum fading. Watch this trend line right here. This is a longer term. During the day, you could probably find a better entry, but so you'd be neutral right now, pending this pennant right here, and you could take the break of this line right here. Keep in mind you got a gap down here that could possibly fill. These gaps are filled already. So, I mean, that's 60 points. 10% would be 30. That's 20% retrace. That's an interesting retrace. That'd have to be some sort of debacle. But just keep an eye on it. And you got a nice setup long term. I mean, you know where to go. You could hang out neutral right here, take a break to the upside, a break to the downside. That's how I would play Tesla. And let's take a quick look at Microsoft, because it just gives us a feeling for what people feel about the economy. Microsoft and Apple. And that's why I look at it. It's not really a security at trade because it's not that aggressive a mover, but it's just in consolidation. It's really not telling me anything. It's a wait and see. You know, everybody wants to see. We got the Fed talking, and we have some economic indicators coming out, and everybody's just waiting and seeing. Where's my resistance? I'm going to put it. You know what? I like that one right there. It's kind of middle of the road. I mean, we break this resistance. We still have this double top right here to break through, which is a little stronger, you know, a little more respectful. But I don't like these gaps in between. I'd rather just look at it one at a time. I wonder what a trend line looks on that. That's not the one I'm looking for. Give me the snap line on the high. I'm getting a little more fluid with this. Yeah, you could hold that line right there, to tell you the truth. Let's get rid of this bad boy. You can't get rid of them until you get rid of this. It's not a great software, man. This software is like kiddie shit. But I've got a couple of accounts with Schwab, and I mean, they're cheap to execute, and your long-term shit, or your income shit is pretty good. So if you have little bullshit accounts that you don't do a lot of trading in, and you just let sit and hold things, Schwab is the bomb. Low cost, and they can cover beyond what SPX covers. So yeah, just anyway. All right, so here's Microsoft. It's in a channel waiting for the breakout. I love these channels. You know, I love these channels because this is telling me that the fear is coming out of the market, and people are just kind of sitting around waiting. There's no buyers out there, but there's no panic selling. This Apple, this oh, it's on a daily. No wonder why. It's on a minute. So that was perplexing when I saw that. So here we go. Apple looks like it's trading just like the dailies, but I mean, it's incredible that Apple came all the way back. So this is telling me that there's just confidence in the U.S. economy, you know, and people just love the value of Apple, and they're buying the value of Apple. But we still have these gaps back here, right? And this is just telling me that these are the targets when we get a little rattled, when we get a burst of bad news. Algorithms will read the negatives in the sentences and force this market down to this area. So this is the debacle day. Everybody's just got to keep an eye on that. I don't see any setups I'm really watching. I mean, it looks like a bear flag that triggered, or I wouldn't even say it created a bear flag yet. There's just nothing here for me to enter. I like the idea that it ran up. It's got to be overextended. I want to see a little consolidation on it, and I'll just keep an eye on that. And finally, coin. Do we want to look at coin? Nah, fuck it. I'm not looking at coin. All right, so that's it. So again, we got we got Jackson Hole settling up today, but that's just a big old economic symposium. Jackson Hole is a beautiful vacation destination. There's golfing, there's lakes, there's fishing, there's all sorts of great shit to do around there. All a bunch of finance people come around and celebrate themselves. But most importantly, Powell's speaking, and that's that's the highlight of it. And that's what the market's waiting for too. Powell speaking tomorrow, and seeing what insight he's going to give. Some people are saying he's going to try to talk the market down. Some people think that he'll say the same thing he said in the last meeting. So we're just watching. We're just watching. If he tries to talk the market down, then yeah, we're going to see those flags trigger. We might see those gap fills. We'll see. And really, dude, it's knee jerk reaction. It's everybody's going to be reactionary. The reality is look around, man. Shit's tough, but the issues have peaked. There's work out there. The housing market has slowed down. All right. So consider this. Okay. Interest rates are rising and housing prices are not growing. And that's the real wealth growth in America, right? There are more people who own homes and have equity in homes than own stocks and the market. So having an effect on the housing market takes away from disposable income. And a lot of people pull the equity out of their home for either home repairs or buy a car, put kids through college, or buy clothes and living because they're confident that their homes are going to appreciate more and they'll gain more equity. So they take these loans, they have this disposable cash, they go to work, they pay down their loans, they gain more wealth because their capital gains are appreciating and really outpacing normal inflation. In these times, it's a lot different, but it outpaces normal inflation. And that's where the excess demand comes from. It's not really from the wealth of the stock market, although it adds to it and people pick up a few shtickles here and there, but more of the economy are in real estate than in the stock market, or more of our population. So this is having a dramatic effect. And now people are going to start saying, you're going to start hearing the chatter that, the destruction of the housing market is destroying the spending power and it's going to send us into a deep recession, which bunch of bullshit. First of all, there's no destruction of the housing market. And the recession in housing is really just the supply end, right? That has slowed down. The sales have slowed down because interest rates are getting ridiculous. It's becoming less affordable. And there's less confidence in what's going forward. When people have more clarity, they'll be willing to buy again. And with the talk of the housing recession, people are backing off and saying, okay, maybe I could buy more house for a little less down the road. So they're backing off the buying a little bit. And this is all good because homes were going crazy. They were appreciating to a ridiculous level, and it's making things more affordable. And this is all very good. Now, what people will harp on is the housing market in 2006, 2007, and the Great Crack. And that was entirely different from what we are looking at now. And they relate back. Well, back in 2007, the first thing we saw was building slow down, and then there was a housing recession, and the market cracked. Entirely different animal. You could buy homes for no money down back then. And everybody was buying it on adjustable mortgage rates. So you got like 2% now, but in 4 or 5 years, it jumps up to 7%. So that's when it happened. That's when it cracked. When the housing market or all these mortgages popped and went to their 7% lock-in. People couldn't afford to pay their mortgages, and they walked away from homes. So you had a flood of foreclosures hit the market. And then it came out that they were doing these proprietary loans. Banks were doing these proprietary loans and lending to people. And you had hookers who had 3 or 4 mortgages because you didn't have any income checks. You had, if you had a decent credit, they wrote you they gave you a blank check. You could have 3 or 4 mortgages. I'm telling you, man, there were strippers, prostitutes who had like 3 or 4 mortgages on owning homes, and they'd rent them out or they'd have parties and shit like that. And then when the interest on the mortgages, the low interest or introductory interest rate expired and it went to the fixed rate, they couldn't afford to make their payments. The payments tripled on some mortgages, and it just forced people out. And then it initiated the crack. And then there were a lot of people who took advantage of these proprietary loans, who were working and things like that. But they were low income, hard workers, young people, didn't save any money, but had an opportunity to buy a house for no money down. So then, because of the proprietary loans and the industry cracking and the fail of the banks, a lot of people lost their jobs and they couldn't meet their loans. And then those proprietary loans clicked into the high interest rates and forced people out. So entirely different animal. So when you hear people start relating our financial market to 2006, 2007, 2008, and actually I first started seeing it happen in 2006, the country was onto it by 2008. Anyway, it means nothing because it was in the housing sector. Doesn't mean it's going to happen again now. Entirely different animal behind it. So the banks were highly regulated. You couldn't get mortgages without a substantial amount of money down. The criteria on getting a mortgage loan is much more restrictive now, and there's a lot of protection. And then in addition, these banks that had these proprietary loans that were getting hammered had the credit swaps, right? So you had these bad loans that they were getting hammered from the direct borrowers, but those loans were bundled into bonds, and then credit swaps were done on them, and then options were written on that, and options were written on the options, and it was just a trickle-down effect. So what happened in 2006 with the real estate was an entire financial industry meltdown. Everybody getting drunk by the scent of their own perfume, and then the hangover came. Yeah, that's it, man. So that's my rant, man. Housing market rant. So maybe that'll be the title. All right. Anyway, for all you folks, hey, we're keeping this commercial free, and we keep it current and coming. So thanks to everybody who hits me up through Patreon. And if you're listening, go down to the Patreon account. Hit us up, man. Throw us a buck. Tell me these pearls of wisdom are not worth a buck. Throw me a buck and help me build this channel. Spread the word. Retweet me. Post me on Reddit. Whatever you got to do, man. Help me out. Help me out. And I'll keep it coming if you find appreciation in this. If you don't, let me know in the comments. If I have no value, let me know and I'll wake up later. All right. So that being said, everybody calm and cool. Be at peace when you trade. And good luck with your trades.